STRD, another preferred stock offering from MSTR. This one is incredibly interesting because it builds out their portfolio of what they can offer and actually elevates some of their other products while allowing them to access new investors that can only invest in these types of products. This is what they've been doing. They've been building out a capital structure. They've been building out different financial products that essentially wrap their Bitcoin and allow other investors to have access to Bitcoin's upside returns or part of them, and having downside risk protection, which is part of their mandates as investors. My name is Forrest Hodel. I'm a Bitcoin educator. And if you want to book me for a one-on-one to cover Bitcoin basics, Bitcoin security needs, best practices, and so on, you can do so through a link in the description. All right, so let's take a look at their presentation here. They presented and announced that they were releasing this perpetual preferred stock offering. And this is where it lays in this amazingly shaped graph here. They have all of their Bitcoin at the bottom as their base layer, 61 billion worth of Bitcoin as of creation of this slide, $130 billion of MSTR shares. This is their market cap. And this begins to show what is higher up on the capital structure. So essentially in a liquidation event, there's a liquidation preference from top down to all the way down to the MSTR share common shares, which means that you're taking on the most risk the lower down you are on the capital structure ladder, or in this case, pyramid or triangle. You know, this doesn't necessarily create a pyramid because that's a 3D structure. We just have a triangle here. Let's not get crazy. Okay, so STRD is above MSTR in the liquidation preference, meaning it's a little bit less risky. They initially had an offering of 0.25 billion. So we'll take a look at that, and we'll actually see what they were able to do now that we have some additional information beyond this. On top of that, there's Strike, which is their perpetual preferred convertible stock option or stock offering. And on top of that, there's Strife, which they believe is their crown jewel. So you can kind of see here, they've actually labeled some of this. So Stride is supposed to be their high yield. Strike is fellowship with stipend. So it has some of the upside of MSTR, which is incredibly interesting. I plan on doing another deep dive on Strike. I think it's one of their most compelling products personally. And then Strife is a very similar perpetual preferred to the Stride, and it pays out a fixed amount based on the liquidation preference or the price that it's initially sold at. And every single year it pays a certain amount. I believe it's $10 on this one. We'll look into some more details. This is their crown jewel. And then on top of that, there's the converts, and it's the least risk partial upside of MSTR common. And these converts, I believe they're going to just basically start rolling these off as time goes by. And Strife looks like it's going to take that top position and be, again, the crown jewel. The crown sits on the top, right? So they haven't been issuing converts. It seems like they have a lot more control and ability when they issue these preferreds, these three preferreds they have, and they sell to a specific market. So let's take a look at those markets. So one thing that's really interesting is their initial offering was 2.5 million shares at $85 per share, and they actually were able to sell 11.76 million shares. So an unbelievable upside, and they raised $1 billion with their initial offering. So the initial yield that they offer off of this is 10%. But the price of this is going to trade on the open market, and that percent is going to go up and down based on a few different factors like credit rating and you know, the amount that they issue new ATM into this. Because if they're applying new shares or selling pressure from new shares, that's going to lower the price and raise the effective yield, because those two things counteract each other. So one difference between Strife and Stride, they both have this initial 10% income stream, but one difference is that Stride's is a non-cumulative dividend, which means that there is no obligation for MSTR to pay that dividend. They could skip a dividend payment, and because of that optionality within there, that actually lowers the value of that preferred stock because it allows it to be more risky and a buyer seeing that will think, okay, these dividends aren't guaranteed, or there's no sort of structure to reinforce the dividend payment like there is with Stride. So let's look at Stride as an example. If they miss their dividend payment, they actually have to pay that dividend payment on top of the next one, and there's a certain sort of interest rate applied to it as well. And then that also adds value to the liquidation preference, which I believe is $100. So the unpaid dividends go onto the liquidation preference as well. So then if there's an event where they're not paying these dividends, they're allowing them to build up even with interest and all of this, and that's building up the liquidation preference, which builds up a floor value of how much those shares are worth in a liquidation event. So that lowers the downside risk with something like Strife, and that doesn't exist in a product like Stride. So Stride doesn't have the cumulative dividends, it doesn't build up the liquidation price, and it doesn't have and it's lower on the capital stack, which means that it doesn't have preferential in a liquidation event, which is all leading this to be deemed as a more risky product, a quote unquote worse type of product. And that's intentional. The reason that's intentional is there are certain buyers that want low risk preferred stocks, and there are ones that want high risk preferred stocks. So because some of the way that the Stride works, it becomes a less favorable type of instrument, which means it's going to trade at a lower price and therefore a higher income yield compared to something like Stride does, which is going to attract buyers that are looking for higher yield income investments. So this is more comparable. If you compared these two, you could say Stride is more of a junk bond, and Strife is more of an institutional grade high-end bond. That's one way to look at it, or debt instrument. The other thing that's really interesting about this is if the ATM comes out, which Saylor has talked about an ATM being available for Stride, and they're able to issue more Stride shares, they use that money to buy Bitcoin. And because they're not issuing more Strife, and because Strife is higher up on the capital stack, when they buy Bitcoin by issuing Stride, it actually increases the value or the collateralization of Stride shares. Having those two different instruments, being able to issue one and maybe issue a little bit less Strife, right? Keeping it more of that crown jewel, having sort of more, more demand, less supply. This would create a better product, maybe a lower interest rate, and would reflect sort of the lower amount of risk. But the capitalization, the amount of Bitcoin being raised could happen from something like Stride, which actually improves the credit quality of Strife, which is very, very interesting. Now, the other thing that Saylor has talked about in this presentation on Stride is that this is an instrument that they could issue basically at any point. So say Bitcoin goes down a lot. The sort of yield the likely yield would go up on all of these preferreds, which means the price of these would go down. But that's because of credit quality, and because of the balance sheet not being as strong as it was, these instruments not being as over collateralized as they are currently. But even still, they could still issue these if there's a demand for them. So if there's a demand for something like Stride, people are looking for high income, they still think that strategy is going to rebound, that Bitcoin's going to rebound. They don't mind being lower in on the capital stack, or if they wanted to be higher, they could buy something like Strife, right? But these instruments allow them to raise capital when, say, MSTR is trading closer to MNAV or even below MNAV. And Saylor talked about this. If MSTR trades below MNAV, they can issue something like Stride. They can use that money to buy their shares back, because it's even more accretive if the MNAV is below 1 than to buy Bitcoin. Or if it's still above 1, they could buy Bitcoin instead. And this would raise the floor of their balance sheet by acquiring more Bitcoin, which would make it very difficult for the market to continue to push the MNAV down or the stock price down, because they're acquiring an asset even with all of the macro or market conditions that they're in. So every one of these slides is incredibly interesting, but here we have the quadruple strategy to generate BTC torque. This is a daily rebalancing of ATM parameters. So each one of these is going to have its ability to ATM, and each one of these has a different ability based on the market. Execution of ATMs minute by minute, depending on market conditions. Synchronized BTC acquisition. All of these are going to acquire Bitcoin, and they have the continuous ability for BTC yield and BTC gain. And you can see the generation of torque, or their ability to acquire Bitcoin, and that Bitcoin to raise in value compared to the cost of issuing these stocks and these preferreds. Essentially, their torque here 12.8 on Stride and Strife. So these are very, very high torque instruments that allows them to acquire a lot of Bitcoin with not a lot of active dilution. So here we have this nice triangle shape again. Stride, so selling this Stride here improves BTC rating of Convert, Strife, and Strike. So everything above it gets more Bitcoin added to the underlying, which improves the BTC rating, the Bitcoin rating. And Stride also adds leverage to MSTR and acquires more Bitcoin, which it means that it should technically trade at a higher MNAV because they're able to use that leverage to justify having a premium over the common. So another interesting slide here, Stride market comparisons, preferred equity. So this was exactly where it sits in. You can see there's not a lot of net assets, PFF, which I believe is actually like a fund of preferreds. I could be mistaken there, but you can see some of these, have 1 billion, right? Their initial offering ended up being 1 billion. Their yield on these preferred stocks are 6 and 7%. The volatility is very low, and the fees are, medium to high, I would say there. And Stride is going to outperform them on all of these benchmarks. It's going to have higher volatility, it's going to have higher yield, and it's going to acquire more assets. It's going to, the preferred market is going to love something like this, absolutely love it. And you can see high yield bonds here as well. The yield could be potentially way higher on something like Stride. So this is just really going to be a perfect placement in the market to acquire more Bitcoin. So let's take a look at how they plan to fund this dividend that they pay out. Equity ATM uses, cover fixed annual obligations, and opportunistically purchase a Bitcoin. So they plan to use the ATM when it's above an MNAV of 1 to instead of directly buy Bitcoin, although they do say opportunistically, they still plan to do that. They can pay the annual obligations. We can see here with Stride, their annual obligation is only 25 million at 250 million, but they've already released a lot more than that. Strike and Strife here, the numbers are here, and for the converts as well. So it really doesn't require them to use a lot of ATM to pay back these instruments. And we know that these are denominated in US currency. So even though it's paying 10%, it's paying that in a currency that is going down in value versus the asset that they've acquired up front from people purchasing this preferred stock. So it's a direct arbitrage using debt of buying a better asset and paying back over a long period of time a depreciating asset that becomes easier and easier to pay for someone like Strategy that acquires more and more of an appreciating asset. So here's some more valuation framework. It says that Bitcoin coverage is 6x backed by world's leading corporate Bitcoin reserves. So they have 6 times the amount of Bitcoin that they need to cover at 1-to-1. Interest rates 10% fixed non-cumulative dividend, and a Bitcoin volatility supported by long-term stabilization of Bitcoin collateral. As far as it goes with Strategy here, that's really about it. We can see that Stride is a brand new weapon in the arsenal of acquiring Bitcoin and shorting the dollar, which is in all sense a really, really great trade to do. And this allows a different cohort to fund this happening, right? This is the speculative attack, and the bond market, the preferred market, is going to be funding the speculative attack against the dollar and replacing the capital of the world with Bitcoin. And Strategy is leading that charge in the corporate world. So this is a really, really great product. I think it's really great for somebody that's looking for high yield. Potentially, if you don't think that MSTR has a liquidation risk, this could be used as something like a cash account. If you think the market, if the MSTR share price, if that's you're investing in, or if you're buying Bitcoin, if you think that market is a little bit hot and you want to take some chips off the table temporarily and de-risk the volatility, you could buy something like Strife if you wanted to, or you could buy something like STRD and get a better percentage. And this could be almost like a cash account with, in my opinion, less risk than a cash account. This is the way to use that as a retail, which I think is a really small aspect of the use case of this, and really not that useful to the vast majority of people. Again, that small little niche use case, I wouldn't see buying this and holding it forever, unless you're an institution that's part of your mandate, which is, the beauty of these products is there are forced buyers of these, forced hodlers of something like STRD and Strife and Strike, and the converts as well. So I think, this is a genius play by MSTR, and came out of the blue. And I think the ability for them to use this to actually increase the value of the preferreds and converts that are above it is really genius. I think that's really the unsung, underrated part of this strategy. So thanks everybody for watching. If you do want to just buy some Bitcoin directly, you can use my link in the description for Bitcoin Well and get some free Bitcoin on sign up. You can also check out my link for the Jade Passport. It's a great hardware wallet. You can get 15% off of the Stampseed kit for preserving your seed phrase using my code BTC not crypto 15, and you can get 5% off of a Server 1 or Server Pure, which is a great sovereign computer that you can run a Bitcoin node on using my code BNC. And of course, again, you can book a one-on-one session with me if you want to cover anything, and the link for that is in the description as well. Thanks everyone for watching, and we'll see you on the next one.